What's up traders, Sasha here. Welcome back to another top trade review video where we once a week review trades taken by ourselves or our students. And in this week we are going to review a trade taken by our long-term senior member Jay Lassenby, who crushed it with a short in the Spanish stock market index. And in today's video we are going to break down and analyze the price action context leading up to the trade so you can understand the reasoning behind the trade. We're going to look at the entry and the trading strategy. We're also going to look at the exact entry, stop loss, and take profit details on the trade. And make sure to watch all the way to the end, as we will also have a look at potential trading improvements that you might find valuable for your own trading. And if after watching you like the video, you like the content, please do not forget to hit the like button below the video to support us so we can keep on doing these free videos and release free content like this for you every week. Also, if you would like to get notified once we release new content, you can subscribe to our channel. And with that being said, let's have a look at his trade here. So in front of you here on the screen, you can see a daily chart of the Spanish stock market index. You can see two green arrows here on the chart, which represents his entry location and his take profit location. And looking at his trade details here, he got in at 70.85. He had his stop loss at 72.08. And his target was at 65.86, and he held the trade for a total of 7 days for a 4R return. And to put that into perspective, R refers to R multiple, and that means that if you were to risk $10,000 on this trade, you would have made a $40,000 return. If you risked $1,000, you would have made $4,000, and if you risked $100, you would have made $400 on this trade. And now that we had a look at the trade details, in order to break down and analyze the price action, we need to switch over to our favorite charting platform, which is TradingView. And if you're not familiar with TradingView, if you have not used it yet but would like to give it a try, we do have a 30-minute tutorial that you can check out by clicking on the link in the top right corner. Now on the screen here you can see that I've broken down my screen into 4 time frames. I do have the weekly time frame top left, I do have the daily time frame in the top right, the 4-hour time frame bottom left, and the 1-hour chart in the bottom right. And starting out, let's take a look at the long-term price action first to see what has happened. And we can see this very sharp and strong sell-off here in February, March that took price all the way down to a multi-year support and multi-years low here back from 2012, as you can see here on the left. And the price initially here bounced here. The bounce wasn't very convincing at first, but then we had a bullish impulsive move here with 3 strong bullish candles. And this is where things get interesting in my opinion. So then we can go down to the daily time frame and zoom in a little bit more on this price action context. Now here you can see the 3 bullish weekly bars split up into daily bars instead. You can see this is a very strong bullish impulsive move. But what happened thereafter is that this buying here was met with even stronger selling. So you can see there was no real follow through by the bulls after this one. Ideally what you want to see after impulsive moves, you want to see corrective pullback after an impulsive move, and then the next probable move will be another impulsive move into the same direction preceding the corrective structure. But in this case, it was an impulsive move, but the selling following these 3 bars took out 1, 2, 3, 4, and 5 bars. So the selling was much stronger than the buying here preceding it, indicating that bears had found back into this index. And following this impulsive move on the other hand, that's when you see this corrective structure forming. So instead of a bullish impulsive and then corrective pullback or a corrective structure, we see a bullish impulsive move, bearish impulsive move, and then a corrective structure, indicating that bears still are very much in control here in this price action. And following this corrective structure, we then see a follow through by the bears with another bearish impulsive move. So this is clearly short-term bearish again here on this time frame. So this price action is clearly indicating that bears are still in control and that we should look more for shorting opportunities than buying opportunities. And following this bearish impulsive move, we saw a smaller corrective structure forming here and then a potential start of a bullish impulsive move, but it was again met with equal strong selling compared to the buying 2 bars up, 2 bars down, again followed by a corrective structure. And you can also see that the dynamic resistance, which is the 20 exponential moving average here on my chart, is also acting as a resistance. Price is not really able to clear above the 20 EMA here, so it kind of starts carrying price here. And looking on the weekly chart, you can see this even more clearly. If I zoom in here, you can see that price is unable to clear this dynamic resistance. And if you would like to learn more about dynamic support and resistance and how we use the 20 EMA for that, we do have a video on that you can check out by clicking on the link in the top right corner. And this is where Jay Lassenby here got interested in a short trade. He was looking at this in real time and he noticed this entire structure here: bearish impulsive move, corrective structure, bearish impulsive move, bulls tried again but failed again, followed by another corrective structure. And within this corrective structure, in this structure itself, you can also see a weakening of the bullish order flow because the highs are getting lower and lower and lower and lower. And after each lower high, price retraced back to this area of support here. We did have a false break here in the beginning, but you can then see this area act as support, 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 and support. But every bounce from this support was weaker and weaker and weaker, suggesting there was a potential breakout coming. And this is when Jay Lassenby here got interested in this trade, and you have multiple ways to trade breakouts. We also do have a video on how to identify and trade breakouts, which you can check out by clicking on the link in the top right corner. And there are basically 3 ways to trade a breakout. You can trade it on anticipation of a breakout, which is trading it here prior before this support is cleared. You can trade it up on the break of the support itself, so that would be a momentum trade, or you could trade it on a breakout and then wait for the pullback. Jay Lassenby is a very experienced trader. He's been with us for many years. He has some really strong price action skills at this point, so he felt confident in his real-time read on the price action here. He saw the lower highs, he saw the bearish, impulsive and corrective sequence playing out. So he wanted to get in as early as possible to maximize his profit potential on this trade. So he said, hey, if price gets back to these open close here and these highs over here, the last highs made, I want to get short. So this is where he got in, and he put his stop loss above these highs and these wicks over here. And in terms of target, we can have a quick look why he took a profit, where he took profit. You can check out here on the left side, if you see all these bounces here to the left, multiple rejections, he went for the highest probability target because there's no reference point in this area here. So he had to go further back to the left to April here this year, and he looked at all these rejections and said, hey, I'm going for the highest probability take profit location. And then looking at these rejections, you can see here is exactly where he took his profit. This is where a price bounced from every time, but this is the highest bounce here that came in. So the deeper you go with your take profit, the bigger the risk is that price won't make it there and will turn around before that. And you can see his target here was spot on. Price reversed on a dime here, 2 weeks to the downside, quick 2-bar reversal here, and price took off to the upside. A really well chosen target in my opinion, and this was the highest probability take profit based on this price action here to the left, because this is where the highest rejection came in the past around this area. Now, in terms of trade improvements here, we can see that he clearly nailed this trade. He both nailed the entry here and he nailed his take profit. If he would gone with a higher entry here, his trade wouldn't have gotten filled. If he went for a deeper target towards these lows over here, he would have to sit through this pullback here, and this looks quite strong, so this might actually have stopped him out after price reversed here. We do not know that yet, but he would have at least have to sit through this pullback here and to see his profits evaporate. So overall, I think he really nailed his entry and his take profit on this one. If we look at the size of this move, I mean, that's 560 points. He made 500. So that means he captured 89% of this move, which is fantastic, and that is really well done in my opinion. Now, in terms of potential improvements, we can go down to a lower time frame. The only real improvement I can see here, I mean, I think he nailed his entry, I think he nailed his take profit. The only potential improvement I can see if you want to maximize the profitability of the trade is to decrease your stop loss a little bit, because I think it's kind of a little bit in between. If you look at these highs over here, that's the absolute last high made. This one over here is the next high here. So these are the two areas I can see where to have the stop loss behind. And considering that price was kind of carried by the EMA here, these are the two areas where I would have my stop, either above this one here, which is 71.61, or 72.20. So either I would go for a stop above 71.61 with a little buffer here, or I would go all the way above here, above 72.16 with a buffer above here. Now, if you want to be a little bit more aggressive, I would have gone and just put it above here, above 71.61 with a little buffer. And this would have increased his R potential on this trade from 4 to 5.3, which is a 1.3 R improvement on the trade, and over a series of 10 trades, that's 13 R. So over time, this accumulates and can get a lot. So if you get really good at improving and reading the price action and improving your entry, stop loss, and take profit, this can have a massive positive impact on your bottom line. But of course, you also need to be careful not to over optimize things, because this can also, of course, backfire. So you need to be really skilled at doing this. And overall, I think this is an A+ trade, A+ setup, A+ trade. He did a really good job at reading the pre-breakout structure here. He did a really good job at anticipating the breakout. His entry was spot on. His target was also spot on here. Very, very nicely done. And the only thing I see that potentially could be improved here is the stop loss, because it was kind of in between two swing points. If you look at the swing structure within here, you can clearly see that these are the swings in here. And based on his entry here, you can see that this, in my opinion, these are the three kind of main areas of stop loss to go beyond. Maybe he did put it beyond here. I don't really know. He wasn't super specific in his post here about his stop loss. But as I already mentioned, I would have put it above here or put it above here. But then again, that's me. That's the way I trade. That's the way I look at improvements. And overall, I think Jay Lazenby did a fantastic job here. So really well done, and congrats on crushing it with this trade here. And this sums up this week's top trade review. We hope you enjoyed it. You hope you liked it and found it helpful. If you liked the video, please make sure to hit the like button below to support us. And also you can subscribe to our channel to get notified every time we release new content. If you would like to learn more about how we teach our students to make money trading, you can check out our website at secondskiesforex.com, where you can find tons of free trading articles, trading tools, and free ebooks. And we have recently also launched an Intro to Trading stock course, which you can access by scrolling down on the first page and clicking here on Find Out More button on the Intro to Trading course here, and then you can just join. And inside of this Intro to Trading course, you will get a free ebook on price action trading, you'll get a free ebook on day trading, and lessons on how to trade price action. So make sure to check out that intro course of ours that we've just released. Other than that, we hope you enjoyed the video. We hope you found it helpful. Make sure to leave a comment below. Let us know what you thought, how you liked it, what's your view on the Spanish stock market index here, how you are looking to trade it. Chris and I are looking forward to your comments and questions. And other than that, good luck trading, be well, and see you next week for another top trade review video.